Hello guys, and welcome to day 2 of the Camp Financial stock market updates YouTube and podcast show. And I want to start today with talking about I'm not sure, a lot of people are pretty familiar with it, and a lot of people aren't, but if you ever do any shopping online, you should definitely check out both Upromise and Ebates. Upromise, if you are either paying student loans or thinking about sending a child to school, I would recommend you take a look at that one. Or Ebates is just a general one, but basically they're cashback websites. You use them. So like the other day I saw, and a lot of it depends on the, what's going on at that point in time. Some companies will be running specials, but for example, if you do Groupon shopping, I was taking a look and I saw that Ebates, I believe, had a 5% cashback rebate on any Groupon purchases, and Upromise, I believe, the same day. I think theirs might have been at 9% that day. So like I said, depending on the website that you're going to use, depending on whether you're looking to save money for college or save money to pay for college that you've already attended, you may want to take a look at those two websites, because I found, like I said, if you can save an additional 5 to 10% on most of your purchases, I consider that to be winning in the game of life, right? I mean, that's, as you're getting further, it's going to advance you further than what would have been if you hadn't used those. So, just a thought. I know not everybody is interested in going through the extra clicks and the extra time, because it does take a little bit of extra time. You have to go to either the Upromise website, or you got to go to the Ebates website, sign in there, use that, and then from there, then you go to a link that they provide you, which will take you to the company website that you're going to purchase from, and then obviously at that point in time, then you would complete your purchase just as normal. So like I said, I know it takes a little extra time, but it may be worth it. Okay, so with that, let's jump into the stock market for the 21st. I want to start with the S&P 500 today, and again, it looks like the services sector was the biggest drag on the S&P 500. It looks like I know CarMax reported a little lower than expected on auto sales, top line and bottom line, so they had some struggles all the way around. They were the biggest decliner yesterday in the S&P 500, followed by Indo International, a healthcare company. I didn't see anything that popped out to me on that one, but then the other in the bottom 5 were BorgWarner, an auto parts store, which again makes sense with the auto having some issues. AutoNation was in the bottom 5, as well as Netflix. So the Netflix thing, I think it's interesting because obviously it has such a high price to earnings multiple. I just feel like eventually that PE multiple is going to have to come down some, and that might be what it's doing. It may be starting to correct a little on their on the PE, because at 315 times earnings, which is where it's currently trading at, that's going to take a long time for them to make that into a PE multiple that makes sense. other than the fact that they, are still growing. So it's just going to be a matter of, can their growth continue to sustain the stock price? Again, another good day in the material sector. Marathon Oil continued to climb even after the big first day pop on their purchase. It jumped another 4%, followed by Kinder Morgan Pipeline Company, Micron Technologies, and then United Airlines. And actually, when I looked, it's interesting because I looked at this, I believe about 1 o'clock in the afternoon, and at that point in time, 5 of the 6, or no, it might have been 5 out of the top 10, or it was definitely 5 out of the top 20 though, were airline stocks. Obviously, United Airlines had a pretty good report yesterday, and obviously when, as they like to say, the rising tide raises all ships. When one company reports really strong earnings, usually the rest of the companies that are in that same industry also will feel some of the positive effects of that. So there were our leaders and laggards of the S&P 500. Now let's take a look at the Dow. So if we look at the Dow, the leaders, Microsoft, still off of, partially from that purchase of LinkedIn. Now people are seeing some growth in Microsoft, and I think expectations are climbing again there at Microsoft, followed by JP Morgan, Apple, Nike, and Pfizer. So, like I said, yesterday, I think Nike's continuing. I mean, Nike's a good company, and none of these stocks really were outlandishly up. It's not like any of them were up 12%, 15%, anything like that. Obviously, these are the big, huge Dow Jones Industrial, the big 30. So you're really not going to see a lot of heavy movement in that index. They kind of just all fell in line. Nike, Apple, Pfizer, right there, just under 1%. Obviously, again, the big pop was the 2% gain that Microsoft saw. And now let's look at the laggards in the Dow 30. So it's interesting, out of the 30 stocks in the Dow 30, only 9 were negative yesterday. So, advancing 21 stocks advanced, 9 declined. That's a pretty good indicator for the index. It shows that looks like most of the companies in there are strong. And if you look at the 5 companies that performed the worst yesterday, most of those are companies that most of us would be interested in buying, for a long-term hold. Boeing, and I did read an article or a little piece yesterday about Boeing that they're looks like they're getting ready to sign, or they have signed a deal to sell jetliners to Iran. Leaving the political piece out of it, that opened up, once the United States opened up the trade sanctions there with Iran, it does give Boeing, another place to seek revenue, another country that they can go and sell their goods to. So, number 2, Disney. Obviously, Disney's been feeling some pain with, some of the issues that we've had in Orlando, but I think a lot of that yesterday was probably some profit taking from the drive that I expect they will see come from the Finding Dory movie. Third is McDonald's. again, another, just long-term hold there, pays a good dividend. PE multiple might be a little bit high, but it's hard to bet against any of these companies. Obviously, the next ones are Johnson & Johnson and United Health Group. So definitely Johnson & Johnson, with all of the different revenue models that they have. Very well diversified, long-term strong company. And then United Health Group. It'll be interesting to see what happens with the election, what the plan is for the Obamacare plan. I know that in the past that it helped some of the health insurers or the healthcare companies, but we'll see, where that goes in November. Alright guys, so that gets us through the market. Now I want to get through one of my purchases, I guess, that I made. Let's see, this would have been September 29th, 2015. So I've been holding this stock for about 9 months, and currently I am up about 4% total. So that company is Thomson Reuters. So I bought in Thomson Reuters, and just so I use there's three different ways that I select stocks for my portfolio. One of them I'm looking at a more basically purely a technical aspect. I want to look and see, hey, does sorry, I need a drink. One way I look and I'll say, is this a company that I want to buy? Has the short-term technical, is it leading the midterm technical, and are all three moving, is the current stock price above all three moving averages of the moving averages that I use in my system? So if it is, then it passes, and then I try to find the best company that's in there, because there's usually going to be quite a few that meet the criteria. So like I said, September 29th I bought Thomson Reuters. I bought it at $39.95 a share, and currently it's trading at $41.46 a share. So we are, I am up a little bit. Actually, I need to go back and look real quick, because this may not be completely accurate. Okay, no, that's right. It just seems like that 4% number doesn't seem quite right. Oh, because it takes into account my transaction cost. So right now, Thomson Reuters is up a total of 4%. It's paid a quarter of a share in dividends to me. So I bought, and I'm working in this system with very small numbers. So I bought 10 shares at $39.95. So I spent $400 on it. Set it up to have the dividend reinvested. So now I'm at 10.26195 shares at $41.46, and I've got a stop loss set down around 34 bucks, just in case if it would ever drop to that level. Then we want to get out, because it's probably there's something that's broke down in the company, or in the technicals that might scare us out. So yeah, so right now, like I said, it's up 4%. I'm going to continue to hold. We'll see if it can't push through the highs of 42.81 and start to drive up, because it is pretty close to the high since I purchased. yeah, that's it. So if you have any questions, feel free to leave them on YouTube, or you can send me an email at Chris. So it is Chris M at campfinancial.net. So thanks guys, and we will see you next time. Take care.